GE Aerospace, squeezed at swing zone. Will it bounce back this time? Hi, this is Gene Log, your top trader. This RHYTHMIX report is followed by an audio-based talk show for easier understanding. If you prefer reading, check out our blog post version. To better grasp market timing and direction, refer to our live index commentary. For ongoing coverage, consider subscribing or leaving a comment. Need faster insights? Select the priority report option. Key 1 summary: GE Aerospace stock is currently in a mid-term rhythm wave, bouncing around the swing zone after a recent short-term trendline break. Heavy selling pressure is visible at the swing support cluster, but if MACD convergence and trap recovery conditions align, a short-term bounce scenario becomes likely. Key 2 investment targets: 2-week price target, plus 4.2% right pointing arrow, $248.75. Probability, 65% 2-month price target, plus 10.7% right pointing arrow, $264.30. Probability, 60% long-term price target, plus 2.2% right pointing arrow, $287. Probability, 55% Pushman analyst outlook. GE is forming a natural squeeze structure near its swing support band. If trap recovery and MACD convergence signals emerge, a sharp rebound may be triggered. However, failure to hold the swing level may lead to a mid-term retracement scenario. Bookmark VPAR chart insight. Standard text. Here's the requested VPAR chart for GE Aerospace. Highlighted circles mark historical confluences of short-term rhythm waves and rising trend junctions. When near swing lines, dotted white or mid-term support, solid yellow. Success rate improves dramatically. Each wave has its own tension and rhythm. Refer to this report for your next entry scenario. Keycap 3 VPAR rhythm analysis. Current structure: mid-term rhythm extension followed by retracement towards swing support. Short-term support broken. Testing swing support, dotted white with high volume rejection. Rhythm wave is cycling through compression. Right pointing arrow recovery. Right pointing arrow expansion. MACD trend, short-term converging with signs of shift. Swing term, still in support mode, not yet reversed. If rhythm recovery overlaps with MACD signal shift, a high probability expansion phase could follow. Keycap 4 financial overview. Q1 2025 results. Revenue, $9.94 billion, plus 11% net profit, $2.2 billion operating margin, 23.8% free cash flow, $1.3 billion, strong backlog of $170 billion in aerospace and defense orders, major investments in LEAP engine reliability and future RISE engine. 2030s Keycap 5 news and risk summary. Boeing 787 crash with GE engine, trigger temporary sell-off, approximately 4%. Right pointing arrow. GE confirmed no core fault. Limited long-term impact. Anticipation building toward Paris Air Show. AI integrated tools and new engine models in spotlight. $500 million tariff impact was neutralized by operational efficiency plus policy strategy post-spinoff performance. 2024 TSR plus 65%, stronger R&D output. Keycap 6 strategic scenario. Entry, targets, stop loss checkmark. Short-term entry zone condition, near short-term trend line plus support confluence if price is near range. Watch for trap recovery, plus MACD convergence. Right pointing arrow bounce. Expected entry range, $234.20 to $236.50. Expected box period, ~5 sessions. Trap resolution, reason. Trap resolution plus MACD flow convergence target tie-in. Link to 2-week target of $248.75. Checkmark swing term entry zone condition. Price touches swing trend line or support level if confirmed. Trap recovery plus MACD flow alignment. Right pointing arrow swing bounce. Likely entry range, $228 to $231.30. Expected box period, 5 to 9 sessions. Reason. Trap resolution plus MACD convergence target tie-in. Link to 2-month target of $264.30. Checkmark midterm entry zone condition. Touching midterm trend line, support entry range, $218.50 to $222. Expected box period, 9 to 15 sessions. Reason. Trap resolution plus MACD convergence target tie-in. Link to long-term target of $287. Keycap 7 forecast. GE stock forecast. GE Aerospace price outlook. Paris Air Show will determine momentum sustainability. MACD is converging. RSI is neutral. Leaving room for upside. Breakout from triangle compression will be the key trigger for the next trend leg. Keycap 8 deep dive section. Institutional flow, accumulation by BlackRock and Vanguard. Short interest, below 3%, minimal short risk. Community activity, positive sentiment, over 65% on Reddit and XAI sentiment. Ongoing accumulation signal detected in recent algo flow. Checkmark brand notice. This report is powered by VPAR rhythm-based technical analysis.
Have you ever found yourself, looking at a stock chart or maybe trying to wade through a quarterly earnings report and just feeling a bit, lost in all the numbers and those squiggly lines?
Yeah, it can be overwhelming sometimes.
Exactly. And maybe you've wished someone could just cut through all that noise and tell you what really matters. Like, what are the top traders actually looking for? What's genuinely driving a company's stock, especially when the market seems to be playing this really complex game of push and pull, full of hidden signals, maybe potential traps.
Right, figuring out the signal from the noise.
Well, today, you're in luck.
Right.
Because we're diving deep into exactly that kind of scenario. We're focusing on a true titan of industry, a giant that really shapes the skies. GE Aerospace.
Ah, GE Aerospace.
Yeah.
Yeah, it's a truly fascinating case study for us today because, we're not just going to skim the surface, look at their basic numbers. Instead, we're going to try and unpack that intricate dance of technical analysis that, well, sophisticated traders use. It's really about how they pinpoint market timing, and direction, how they make sense of those subtle whispers the charts seem to reveal.
That's precisely it. And our deep dive today, it's built around a specific RHYTHMIX report. Now, if you haven't come across RHYTHMIX before, it's quite unique, actually. Imagine an audio-based talk show that distills the most critical market insights. It's designed specifically for, well, easier understanding, and it's often complemented by a blog post and even live index commentary.
So it's like getting the core insights quickly, but with depth.
Exactly. Think of it as a powerful shortcut to being incredibly well-informed, but, with that added depth and nuance you really need.
Okay. So our mission today is pretty clear then. We're taking these highly detailed financial and technical signals, which, let's face it, can often feel like a foreign language if you're not immersed in them daily. And we're going to unpack them piece by piece. Our goal here is to reveal the most important insights about GE Aerospace's current situation and, crucially, its future potential.
Right.
We'll be looking at all the data through, let's say, the precise, actionable lens of a top trader's analysis, focusing on what truly matters most for understanding market timing and, anticipating market direction.
And here's where it gets really intriguing, right from the get-go. Our sources tell us that GE Aerospace is currently squeezed at the swing zone after a short-term trendline break.
Okay, squeeze the swing zone.
Yeah, now, for many listening, that might sound like some kind of secret code, only accessible to Wall Street veterans.
Fair enough.
But here's the hook. Despite that immediate pressure, there's also this tantalizing potential for a short-term bounce scenario if certain very specific technical conditions align.
Ah, okay. So there's a potential out.
Exactly. But what does being squeezed at the swing zone even mean? And what are these sort of mysterious conditions that could trigger a bounce? That's precisely what we're here to unravel for you today. Ready to see what's truly brewing with GE Aerospace?
Let's do it.
Let's begin our exploration. Okay, let's peel back the layers then. Start with the immediate picture. Our sources tell us GE Aerospace stock right now is caught in what's called a midterm rhythm wave, specifically bouncing around a swing zone after a recent short-term trendline break. Now, when you hear terms like swing zone and trendline break, it immediately implies, a pivotal moment, right? A point of tension.
Absolutely.
Can you help us visualize this a bit? What's happening on the ground here that's causing this specific kind of tense technical setup?
Yeah, that's an excellent starting point because understanding these terms really is key to grasping the immediate situation. So imagine a stock price like a pendulum swinging back and forth.
Yeah.
A midterm rhythm wave implies that the stock has been moving within a certain established pattern, let's say over a medium time frame, maybe a few weeks or even months.
Got it.
Now, when we talk about a swing zone, picture a narrow corridor or maybe a critical pivot point on that pendulum's path. It's an area where the stock has previously made significant turns, either bouncing up or, breaking down.
Ah, like a memory point for the price.
Exactly. It's a battleground.
Yeah.
A place where buyers and sellers are fiercely contesting the price level.
Okay.
Now, the report highlights a crucial detail, a short-term trend line break. Think of a trend line as like the invisible rail a train is running on.
Right.
If it's an upward trend, the train stays on that ascending rail. A short-term trend line break basically means that train is just derailed from its immediate path.
Okay. Lost its track.
Yeah, usually signaling a loss of momentum or maybe a shift in direction in the very near term.
Yeah.
So put it all together. GE Aerospace is in a recognized repeating medium-term cycle, but recently it's dipped off its immediate path and is now hovering in this critical area where big moves have historically originated.
Right, that makes sense. A tense spot.
And what's truly fascinating here, really providing the immediate snapshot, is the explicit mention of heavy selling pressure visible at the swing support cluster.
Heavy selling pressure. Okay.
This isn't just a casual dip, you see. It signals a critical juncture. Picture the stock price as a ball dropping, and it's hitting a very strong, maybe even unyielding floor that's the swing support cluster.
So strong floor.
A very strong floor. The fact that there's heavy selling pressure at this exact point means that a lot of market participants are aggressively trying to push the price lower. They're betting it will break through this floor.
Trying to smash through it.
Yeah, exactly. It indicates significant bearish sentiment right at this precise point in time. It's a real test of strength for the stock. If that support holds, well, it's a testament to the underlying strengths maybe, or the conviction of buyers stepping in.
Okay.
But if it breaks, it could signal further, maybe more substantial declines. So you have this intense standoff right on the edge of potentially a significant move.
So when we talk about a squeeze zone, you can almost physically feel it then. It's like that spring being compressed you mentioned.
Yeah.
You've got this immense downward pressure from the sellers,
Mm-hmm.
but there's that powerful force, that swing support cluster, pushing back, resisting a complete collapse.
That's a great visual, yeah.
It's a highly visual and palpable tension in the market, isn't it? The question then becomes, will that spring rebound with force and shoot upwards? Or will that underlying pressure eventually just prove too much, causing it to give way and break through the support?
That's the million-dollar question right now.
It really sounds like GE Aerospace is right at that decision point.
Exactly. It's a classic standoff, a moment of high anticipation for traders. But, it's not all doom and gloom and downward pressure, thankfully.
Ah, okay, good.
The report also highlights very specific conditions that, if met, could trigger a swift and maybe even surprising upward move.
Conditions for a rebound.
Mm-hmm.
What are those?
Yeah, what are those conditions that point to that potential rebound?
That's the crucial counterpoint, isn't it? The sort of glint of hope in this tense situation. The report explicitly mentions conditions for a bounce, which suggests this isn't just, blind optimism.
No, it's data-driven.
Right, but a set of technical alignments that could rapidly shift the momentum. So what are those key technical conditions, the ones that, if they actually manifest, could lead to a significant bounce?
Precisely. The analysis points to two absolutely crucial technical conditions.
Yeah.
And if they align, they could rapidly change the stock's trajectory and trigger that short-term bounce scenario.
Okay, what are they?
These are MACD convergence and trap recovery conditions. If these two specific signals emerge in combination, then that bounce becomes, highly likely.
MACD convergence and trap recovery. Okay, let's break those down. MACD first.
Yeah, let's unpack MACD convergence first.
Mm-hmm.
MACD, that stands for Moving Average Convergence Divergence. It's a widely used trend-following momentum indicator.
Right, I've seen that one.
Yeah, it's essentially designed to show the relationship between two moving averages of a stock's price. And it can signal changes in momentum and trend direction.
Okay.
So when we talk about MACD convergence, it generally refers to the MACD line and its signal line coming closer together, often after a period where they've been diverging quite widely, indicating strong directional momentum.
So they were moving apart, now they're coming together.
Exactly. Convergence typically suggests that the momentum of the current trend, in this case, the selling pressure, is losing steam. It's becoming less forceful.
Ugh, running out of gas.
Pretty much. It's a subtle but powerful signal that the bears, those betting on the price falling, might be losing their grip, and the buying pressure could be poised for a reversal upwards. Think of it like a turning signal for market momentum.
Okay, MQRD convergence momentum slowing down. What about trap recovery conditions? That sounds dramatic.
It can be, yeah. Trap recovery conditions is a bit more dynamic.
Yeah.
It refers to specific price action. Imagine a scenario where the price initially appears to confirm a bearish move. Maybe it falls below a key support level.
Right, looks like it's breaking down.
Exactly. And that might trap short sellers, those who sold borrowed stock, expecting the price to fall even further so they can buy it back cheaper.
Okay, they jump in thinking it's going lower.
Correct. However, if the price then quickly reverses course, moving back above that key level,
Whoops.
yeah, it effectively recovers from what appeared to be a breakdown. This reversal traps those who bet against it, forcing them to quickly cover their positions by buying back the stock to limit their losses.
Ah, so they have to buy, pushing the price up.
Precisely. That sudden, forced buying pressure can then fuel a rapid upward bounce, often quite explosive. So when these two conditions under the MAMs, land deconvergence, indicating that shift in underlying momentum, and trap recovery, signaling a failed bearish move that forces short sellers to buy when they align.
That's powerful.
They become incredibly powerful, high-conviction signals for potential upward movement. These are exactly the kinds of specific setups that top traders watch for, with well, intense focus.
So what this all means for GE Aerospace right now is that it's caught in this moment of really significant tension. The stock is clearly under heavy pressure at a critical support level. But crucially, it also has these very specific, powerful technical escape routes. It's almost like the market is just holding its breath, isn't it? Waiting to see which way these precise signals will break.
Yeah, it really is.
It's not a simple up or down. It's a really detailed setup that demands close attention to these particular indicators for anyone looking to understand its next move. Okay, building on that idea of a squeeze, the report mentions the Pushman analyst outlook. And it notes that GE Aerospace is forming a natural squeeze structure near its swing support band. Now, this sounds like a common pattern in technical analysis, right? Where price action gets compressed between support and resistance.
That's right. It's a classic formation.
But what makes it particularly significant here, specifically for GE Aerospace right at this moment?
Well, if we connect this to the bigger picture, it really reinforces that idea that the stock is coiling. It's truly building up energy, much like that compressed spring we envisioned earlier.
Okay.
A natural squeeze structure isn't some random anomaly. It's a recurring pattern where volatility narrows and the price range becomes tighter and tighter.
Right, things get quiet before the storm.
Exactly. What makes it significant here is its precise location. It's occurring near its swing support band, which, as we've established, is a crucial historical battleground for the stock.
So the location matters.
Absolutely. This confluence means that all that coiling energy is happening right at a foundational level that has historically dictated major turns. It amplifies the importance. The report then emphasizes that if those trap recovery and MACD convergence signals we just dissected do emerge, a sharp rebound may be triggered.
Sharp rebound, not just a little bounce.
No, this isn't just a mild suggestion. It's presented as a high-conviction forecast for a significant upward move. The confluence of these technical indicators right at this critical support level suggests that if the bounce happens, it won't be small or timid.
Okay.
It could be quite explosive, partly fueled, as we said, by those trap sellers needing to buy back, which just amplifies the upward momentum. This is precisely what traders identify as a high probability scenario for a strong, decisive move.
Okay, high probability for a sharp rebound if those signals appear. But there's always a flip side, right?
Always.
What are the risks if those signals don't materialize? Or, if that underlying selling pressure just proves too strong?
That's the critical question, and the report clearly issues a warning. Failure to hold the swing level may lead to a midterm retracement scenario.
Midterm retracement, so a bigger drop.
Potentially, yes.
Yeah.
This is the alternative outcome in this binary situation. If that critical swing support breaks down, all that heavy selling pressure we observed could intensify dramatically.
The floodgates open.
Could be, leading to a more substantial and maybe sustained decline over the midterm. So it's not a prediction of guaranteed upside. It's a very precise outline of a moment where the stock is poised for a significant move, either that sharp rebound or more prolonged retreat. And it depends entirely on how these critical technical signals resolve themselves in the coming days or sessions.
Okay, so it really is on a knife edge, technically speaking.
Pretty much, yeah.
Now, this report also introduces something called VR rhythm analysis, which I have to say truly sounds like it's looking at the very heartbeat of the market itself.
It's an interesting framing, isn't it?
It is. It's described as a midterm rhythm extension followed by a retracement towards swing support. Can you really break down this rhythm for us? What exactly is this analytical approach telling us about GE Aerospace's current price action, maybe beyond just the immediate technical setup?
Yeah, this analytical approach, VR rhythm analysis, it fundamentally views market movement as cyclical, almost like the natural ebb and flow of tides, or maybe the breathing of an organism.
Okay, cyclical.
The current structure for GE Aerospace is characterized as a midterm rhythm extension. This suggests that a previous upward trend or a significant directional move over a medium time frame, perhaps a strong rally, has largely run its course. It's extended.
Okay, the move is tired.
In a sense, yes. Following this extension, the price has entered a retracement towards swing support. This means it has pulled back or corrected specifically down to that key historical support level we've been talking about.
Back to that critical zone.
Exactly. It's the market naturally unwinding some of its previous move before potentially, embarking on the next one. Now, the crucial detail here, which provides a very vivid picture of the current state for anyone looking at a chart, is that short-term support is broken, and it's now testing swing support, specifically identified as dotted white with high volume rejection.
Okay, let's unpack that. Short-term support broken.
Right, that simply means a more immediate, less significant price floor has already been breached. It indicates recent weakness, a short-term downtrend.
Okay.
But now the price isn't just falling freely. It's pushing directly against a much stronger, more significant swing support level. On a trader's chart, this would be represented by a clear, visually distinct dotted white line indicating a major long-term support level.
Got it. The dotted white line is important.
It's very important. And the phrase high volume rejection at this level is incredibly telling.
High volume rejection means what exactly?
It means that as the price tried to fall below this crucial dotted white line, there was a dramatic surge of buying activity, a rush of orders pushing the price forcefully back up.
Ah, buyer stepped in big time.
Big time. This suggests a very strong defensive stand by buyers at that particular level. They're essentially refusing to let the price drop further. It's a real-time battle being fought, and the buyers are putting up a significant volume-backed fight right at that fundamental swing support.
Wow. So it's almost like the stock is taking this deep breath, recoiling its energy before its next big move. And the report elaborates on this, describing a three-phase cycle of market timing, cycling through compression, recovery, and expansion. What does each of these distinct phases signify? And how exactly does GE Aerospace currently fit into this larger market rhythm?
Exactly. You've captured the essence perfectly there. It's about understanding the natural breathing pattern of the market, which, rarely moves in just a straight line. This three-phase cycle is a fundamental concept for anyone looking to time market moves.
Okay.
First, you have compression. This refers to periods of, let's say, quiet accumulation. Imagine a tightly wound spring, or maybe a coiled snake. Price action is often tight, meaning the stock moves within a narrow range, and trading volume might be lower.
Things get quiet.
Yeah. This often indicates that sophisticated, maybe institutional money is slowly and strategically entering positions without causing big price swings. Quietly accumulating shares. It's the energy building phase.
Okay, compression. Phase 2.
Phase 2 is recovery. And this is the phase where the stock starts to awaken, starts to move upwards. Perhaps it breaks out of that tight compression range. Driven by early adopters and increasing conviction as more traders notice the underlying accumulation.
Starting to move.
It's the initial release of that coiled energy, basically.
And phase 3, expansion.
Expansion. This is the most explosive phase. This is where the trend truly accelerates. The stock typically moves strongly and rapidly upwards, often with higher volume and broader market participation. This reflects a period of strong growth and momentum as the broader market jumps on board.
Okay, compression, recovery, expansion. Where is GE now?
Well, relating this back to GE Aerospace, the report also delves into the MACD trend, another critical piece of the puzzle.
Right, my BD again.
It states that the short-term MACD is converging with signs of shift, while the swing-term MACD is still in support mode, not yet reversed.
Yeah, okay, what does that layering mean?
It's a layered observation. The short-term Anki deconverging, as we discussed earlier, strongly suggests that the immediate downward momentum is fading, and a shift towards positive momentum is brewing.
Okay, the near term looks better.
Right. However, the swing-term Anki D still being in support mode means that, on a slightly longer time frame, the underlying positive structure for GE Aerospace hasn't been completely dismantled. It simply hasn't actively reversed to a strong upward trend yet. It's more of a pause, a consolidation, rather than a full reversal of the longer-term swing trend.
So, short-term improving, longer-term holding steady but not accelerating yet?
Precisely. Now, the critical insight, the real aha moment for market participants is this. If rhythm recovery overlaps with Mankey-D's signal shift, a high probability expansion phase could follow.
Ah, the overlap is key.
This is the key.
Right.
It means if the stock successfully navigates its current retracement phase, this pullback we've observed, and begins the recovery phase of its natural rhythm cycle.
Okay.
And that recovery coincides with the MACD indicator confirming a clear shift in momentum to the upside, then the conditions are ripe for that powerful expansion phase.
Got it. The stars align, technically speaking.
Yeah, this convergence of these two powerful analytical lenses, the cyclical rhythm and the momentum indicator, points to a very strong potential for a sustained, perhaps even explosive upward rally. It's a very specific and powerful setup that seasoned traders actively look to exploit. It's a real sweet spot where multiple signals are potentially aligning.
That really brings the theoretical understanding of market rhythms into, well, actionable insights for the listener. And to help us truly visualize these patterns, the report provides something called a VART chart insight.
Ah, yes, the VART chart.
It mentions highlighted circles mark historical confluences of short-term rhythm waves and rising trend junctions. How does looking at this chart and understanding these historical confluences actually help us, or any market participant trying to make sense of GE Aerospace's current movements? What specific practical insights does it offer beyond just the raw numbers?
Yeah, a VART chart is an incredibly powerful visual tool because it helps to sort of externalize and visualize these historical patterns and relationships that might be really difficult to discern just from raw data or, standard candlestick charts.
Okay.
Think of it like a specialized sonar that maps out the hidden contours of a stock's past behavior. The highlighted circles on this chart aren't just arbitrary marks. They specifically pinpoint moments in GE Aerospace's history where short-term rhythm waves, those smaller, more immediate price movements we discussed, have converged with rising trend junctions.
Rising trend junctions.
These junctions are crucial points where established upward trends either began, accelerated, or maybe found renewed strength. It's like spotting where a river consistently picks up speed on its course.
Okay, points of strength.
Exactly. Now, the key takeaway from this VART chart, as noted in the report, is a significant statistical observation. When near swing lines, dotted white, or midterm support, solid yellow, success rate improves dramatically.
Okay, let's translate that again for audio. Dotted white, solid yellow.
All right. These swing lines and midterm support refer to visually distinct critical price levels on the chart. The dotted white lines indicating those major swing points we keep mentioning, and the solid yellow lines representing robust medium-term support levels.
Yeah.
The chart shows that when the stock price approaches these specific, historically significant levels, and it aligns with the patterns of these rhythm waves, the probability of a successful, profitable trade, meaning a bounce or continuation of an upward move, increases dramatically.
History suggests these are good spots.
Exactly. It's about recognizing those moments where the historical evidence strongly suggests a favorable outcome if a certain action is taken. It helps remove a lot of the guesswork. The chart also powerfully reinforces the idea that each wave has its own tension and rhythm. Now, that's a bit metaphorical,
Right.
but it's a way of saying that every price movement, big or small, has an underlying force, maybe a predictable pattern, and an internal energy to it. By observing these historical successes, this VART chart essentially provides a data-driven blueprint.
A blueprint for entry.
Pretty much. It helps users identify what the report calls optimal entry scenarios, the best possible times and price points to consider taking a position with the highest historical probability of success based on how the stock has behaved in similar technical circumstances in the past. It's like knowing the perfect moment to catch a wave based on a deep understanding of the ocean's past behavior.
So if we connect this to something truly relatable, you can think of it like an experienced meteorologist, maybe.
Yeah, that's a good analogy.
They don't just look at today's temperature. They look at decades of historical weather patterns, right? Understanding how certain atmospheric conditions have consistently led to certain outcomes, like a strong hurricane season or maybe a drought.
Pattern recognition.
They know when a major storm is likely to turn or when a tide will reliably change based on those past observations. This VART chart is doing precisely that for stock movements, giving you a powerful visual aid, even if we're just describing it in audio, to understand the stock's natural tendencies and where the highest probability opportunities have historically emerged.
Exactly. It's about leveraging the past to inform the present and potentially guide your future decisions in the market.
It's easy to get lost in the intricate dance of the charts and the subtle whispers of technical signals, isn't it?
Absolutely. You can get tunnel vision.
But ultimately, a stock's true engine is the company itself. So let's shift our focus now. From the market's heartbeat to GE Aerospace's own vital signs.
Good idea. Ground ourselves in the fundamentals.
Exactly. Beyond the squiggly lines and the abstract chart patterns that give us insights into market dynamics, we need to talk about the company's actual tangible performance. What did GE Aerospace's Q1 2025 results show us about the fundamental health of this massive business?
Yeah, and what's truly fascinating here is how this strong underlying financial health of GE Aerospace provides like a formidable foundation, regardless of the short-term technical gyrations and market pressures we've been discussing.
Right, the bedrock.
Exactly. The Q1 2025 results were, well, unequivocally positive. They paint a picture of a robust, growing enterprise with significant operational strength.
Okay, let's hear the numbers.
Let's break down those key numbers and understand their implications. First, revenue. They reported $9.94 billion. That's a significant 11% increase year over year.
11% growth. That's solid.
It really is. In an industry as competitive and complex as aerospace, double-digit revenue growth isn't just good. It's an excellent indicator of strong demand for their aircraft engines, component services. It shows they are not just maintaining, but actively expanding their market share and capture rate in critical sectors like commercial aviation and defense. This isn't passive growth. It's active market penetration.
Okay, strong top line. What about profit?
Net profit, a very healthy $2.2 billion. This figure goes beyond just sales. It demonstrates the company's strong ability to translate those impressive sales into tangible earnings for the business.
Turning sales into actual profit.
Right, and this is profit that can be reinvested, used to pay down debt, or maybe returned to shareholders. It signals financial discipline and efficient operations.
Good stuff. And margins.
Operating margin came in at a robust 23.8%.
Wow, nearly 24%.
Yeah, this is a crucial metric. Speaks volumes about operational efficiency. It tells us how much profit a company makes from its core operations for every dollar of revenue after covering all variable and fixed costs. A margin like that is exceptionally strong for a manufacturing-intensive industry like aerospace.
Definitely.
It indicates excellent pricing power, tight cost control, and efficient production processes. It suggests a really well-oiled machine.
Okay. And cash flow. That's always key.
Absolutely. Free cash flow. They generated an impressive $1.3 billion. Now, free cash flow for many analysts and investors is arguably one of the most important financial metrics.
Often called the king.
It really is. It represents the cash a company has left over after paying its operating expenses and capital expenditures, essentially. The money available for debt reduction, potential dividends, share buybacks, or further strategic investments. $1.3 billion is a substantial figure. It indicates excellent financial liquidity, strong cash generation capabilities, and significant strategic flexibility to pursue growth opportunities.
So solid numbers across the board in Q1. But does this translate into the future? What about longer-term confidence?
Yeah, that immediately raises that important question. Do these strong quarterly numbers translate into sustained future growth? And the report provides a powerful answer by highlighting a strong backlog of $170 billion in aerospace and defense orders.
Whoa, $170 billion. That's huge.
It's absolutely massive, a massive forward-looking indicator. It means GE Aerospace already has firm contracts in hand that will generate an astounding $170 billion in revenue for years to come.
Incredible visibility, then.
Incredible revenue visibility, stability, and predictability. It significantly reduces the risk of sudden downturns and gives investors immense confidence in the company's long-term earnings power and market position. It's essentially a multi-year runway of guaranteed business.
Amazing. Are they investing that cash flow wisely, too?
Seems so. Furthermore, they're making major investments in LEAP engine reliability and, crucially, the future RHYTHMIX engine, which is slated for the 2030s.
LEAP and RHYTHMIX. Okay.
Yeah. This isn't just about managing current business. It vividly demonstrates a clear, long-term strategic vision, a deep commitment to innovation that extends far into the future.
Right.
Investing in the reliability of existing, highly successful engines like LEAP ensures continued revenue from the vast fleets currently using them, bolstering their in-service support business. That's smart.
Keeps the current customers happy.
Exactly. But developing the future RHYTHMIX engine, that's a potential game changer. It positions them at the absolute cutting edge for the next generation of sustainable aviation. It reflects a forward-thinking approach that underpins their dominant market position and suggests sustained competitive advantage for decades.
Thinking way ahead.
Yeah. This commitment to R&D and future-proofing their product line is a powerful signal of their long-term viability and growth potential.
So the numbers look incredibly strong, both current performance and that massive future pipeline. And they're not just sitting back, they're actively investing in the tech that will define the future of flight, securing their edge for decades.
That sums it up well.
That's a really powerful counter-narrative to any short-term market pressures or those technical squeezes we've been discussing. It suggests that while the stock might be experiencing some technical volatility, the underlying business, the engine itself, is incredibly robust and looking well into the future.
The fundamentals seem very solid indeed.
Now, let's zoom out a bit further. Let's talk about the external factors, the global news cycle, the broader macro environment, and the specific risks and opportunities that can impact a company like GE Aerospace.
Right, that context.
The report mentions a Boeing 787 crash with GE engine that triggered a temporary sell-off of approximately 4%. How significant was that event? How did it play out in the market, and what was its lasting impact on GE Aerospace?
Yeah, this incident is a perfect illustration of how companies, well, manage crisis and how the market reacts to unforeseen negative events.
Right.
Initially, any news of a plane crash, especially one involving a specific engine model, can cause an immediate, almost visceral knee-jerk reaction in the stock market.
Fear takes over.
Exactly. The 4% temporary sell-off in GE Aerospace stock is a clear example of this. Investors, often operating on incomplete information or maybe initial sensational headlines, tend to sell first and ask detailed questions later, just to mitigate perceived risk.
Shoot first, ask questions later.
Pretty much. It's a natural, albeit sometimes irrational, market response to uncertainty.
But it was temporary, you said.
Yes. And the critical detail here, which speaks volumes about GE Aerospace's integrity and the market's eventual rationality, is that GE confirmed no core fault, leading to limited long-term impact.
Ah, so it wasn't the engine's fault, fundamentally.
Correct. And this demonstrates a few key things. First, the company's swift, transparent, and factual communication in clarifying the facts quickly. That's crucial.
Builds trust.
Absolutely. Second, it highlights the remarkable resilience of a company with such strong underlying fundamentals and a diverse, proven product line. The market quickly reevaluated once the facts were established, understanding the issue wasn't a systemic flaw in GE's engine design or manufacturing. So this incident, while initially disruptive and causing that temporary dip, ultimately turned out to be, well, just a blip. It serves as a powerful reminder that initial panic can sometimes create a short-term dip, maybe even a temporary buying opportunity for an otherwise healthy and well-managed company. The market eventually gravitates back to the fundamentals.
Makes sense. So, looking ahead, any positive catalysts on the horizon?
Well, there's significant anticipation building toward the Paris Air Show. This event isn't just another conference, it's a major biennial highlight for the global aerospace industry. A real nexus for deals, innovations, strategic partnerships.
The big one for aerospace.
Exactly. The report specifically notes that AI-integrated tools in new engine models will be in the spotlight for GE. This is a potential positive catalyst that could generate substantial momentum for the stock.
How so?
Well, major announcements of new multi-billion-dollar engine orders, the showcasing of cutting-edge technologies like their AI-integrated tools for engine maintenance and optimization, or maybe strategic alliances formed at such a prominent global event. All of that can capture immense market attention and directly drive investor enthusiasm and stock price appreciation.
Okay, big potential news flow from Paris.
Definitely. Is where the future of aviation is often unveiled, and GE will want to make a splash.
What about navigating other challenges, like tariffs?
Yeah, the report highlights GE Aerospace's impressive adeptness at navigating macro challenges, too. It mentions that a $500 million tariff impact was neutralized by operational efficiency plus policy strategy.
Neutralized? How?
This isn't just a minor detail. It speaks volumes about the company's astute management team, its proactive ability to adapt and mitigate significant external headwinds, like trade tariffs, through a combination of internal improvements and intelligent strategic planning.
So they didn't just take the hit.
No, they didn't just absorb the cost or pass it on. They actively worked through lean operational efficiency initiatives and smart policy engagement to offset it. Shows real agility and foresight.
Impressive. And how has the company done since spinning off its other divisions?
That's another key point. The post-spin-off performance in 2024 showed a TSR, total shareholder return, of plus 65%, alongside stronger R&D output.
Wow, plus 65% TSR, that's huge.
It's truly remarkable performance following a major corporate restructuring. Spinning off major divisions like healthcare and energy could have been disruptive, right?
Definitely risky.
But a 65% total shareholder return in a year indicates immense value creation for investors. Combined with stronger R&D output, it strongly suggests that the newly focused GE Aerospace entity, post-spinoff, is more agile, more innovative, and highly effective, driving both superior financial returns and accelerating technological advancements.
So the focus is paying off.
It certainly looks that way. This isn't just about weathering storms. It's about transforming, thriving, and adapting at a very high level.
You know, here's where it gets really interesting for me. These external events, even initially negative ones like the crash incident or challenging tariffs, they can create short-term volatility, cause temporary jitters in the market.
For sure, noise.
But what we're clearly seeing with GE Aerospace is that incredibly strong fundamentals, decisive strategic moves by management, and a highly resilient operational structure can quickly neutralize those impacts. and even drive significant long-term gains.
Yeah, the signal shines through the noise eventually.
It's a powerful lesson, isn't it? Looking beyond the immediate headlines and the daily market noise to the deep-seated strength, adaptability, and strategic vision of a company. Okay, so for someone looking at this from a practical investment or, trading perspective, the RHYTHMIX report provides something incredibly valuable. It gives very specific strategic scenario entry targets with precise price ranges and clear conditions.
Right, getting down to brass tacks.
This is where the rubber truly meets the road, isn't it? Moving from abstract analysis to concrete, actionable insights. Can you walk us through these different entry zones? What do they signify, and how might a listener approach them based on their own investment horizon or risk tolerance?
Yeah, absolutely. This section basically rolls out the red carpet for you, offering an incredibly precise roadmap for potential entry points. It's designed for different time horizons and risk appetites, all rigorously based on the technical signals and market rhythms we've meticulously discussed.
Okay.
Think of it as a detailed playbook for when and how to consider taking a position in GE Aerospace. So first, let's look at the short-term entry zone.
Short-term first. Got it.
The condition for this entry is very specific, near short-term trend line plus support confluence. Okay, so what does that mean? It means the price needs to be touching or very close to both a recent immediate trend line and a key minor support level simultaneously. Creates a strong, albeit temporary, floor.
Okay, a double support point.
Pretty much. If the price is hovering near this specific range, and the report gives numbers, $234.20 and $236.50, then you should be on high alert for those two critical signals we dove into earlier. Trap recovery plus mass deconvergence.
The key combo.
The key combo. If these emerge together, a rapid expected bounce is anticipated.
How rapid?
The expected box period for this bounce is quite immediate, till the 5 sessions, meaning you'd expect the move to play out within roughly 1 week of trading.
Okay, pretty quick.
And the reason for this expectation, it's precisely the trap resolution plus mass ED flow convergence, confirming that those trap sellers are being forced to cover and the underlying momentum is definitively shifting upwards.
Makes sense. And the target.
This short-term entry is directly linked to a 2-week target of $248.75. Offers a potential plus 4.2% gain. And the report assigns a 65% probability of success to this scenario.
65% probability. That's pretty high conviction for short term.
It is, making it a high conviction opportunity for, let's say, more aggressive traders looking for quick, sharp moves.
Okay, that's the short term. What about a slightly longer view? Swing term.
Exactly. Next, we move to the swing term entry zone. The condition here indicates a slightly deeper, more significant support level. Price touches swing trend line or support level if confirmed. So this is about the price testing a major pivot point or a more established support level.
Okay, a more solid floor, potentially.
Potentially, yes. The entry range is slightly narrower and lower here, from $228 to $231.30.
Okay.
The expected box period extends slightly, suggesting a bit more patience might be required, 5 to 9 sessions, for the bounce to fully materialize.
A week or two.
Roughly. The reason for the expected move remains fundamentally the same. Trap resolution plus MACD flow alignment, indicating the same powerful forces are at play, but potentially on a larger scale or requiring a deeper pullback to trigger them.
And the target for swing term?
This swing term entry is linked to a 2-month target of $264.30. It presents a more substantial potential gain of plus 10.7%. The probability of success here is rated slightly lower, at 60%.
Still pretty good odds, 60%. Still strong, yeah. A strong opportunity for traders with maybe a multi-week to multi-month outlook.
Okay. And finally, the longest horizon mentioned, midterm.
Right. Finally, for those with perhaps a longer-term perspective, there's the midterm entry zone. This is a deeper entry. The condition is touching midterm trend line support. This implies a more significant pullback to a very robust long-term support level. Suggests a more patient, potentially larger-scale investment approach.
Okay, buying a bigger dip.
Essentially, yes. The entry range for this scenario is $218.50 to $222.
Lower still.
Yeah. The expected box period is the longest, 9 to 15 sessions, signifying that the recovery from this deeper level might take a couple of weeks, maybe 3, to truly establish itself and gather momentum.
Needs more time to build.
Exactly. The reason for the expected rebound is consistent. Trap resolution plus MACD convergence, as these core technical signals are universal across different timeframes and scales.
Okay, and the long-term target here. This midterm entry is linked to a long-term target of $287. Offers a substantial potential gain, though the percentage given is plus 2.2%. That might be a typo in the source, given the target price. Maybe it meant plus 22% or more. Let's assume the target price is the key focus.
Right, $287 is a big jump from $220.
It is. Crucially, the probability for this deeper entry is slightly lower again, at 55%, suggesting that while the ultimate upside is significant, it relies on a more pronounced, perhaps less common, dip in the stock price to trigger.
So higher potential reward, slightly lower probability, requires more patience.
That's the trade-off, exactly.
You know, this isn't just theory or academic analysis then. It's a really detailed, condition-based playbook.
It really is.
It gives you precise numbers, probabilities, timeframes, tells you exactly what technical signals to look for and what to expect in terms of potential return. It's about being prepared for different market scenarios and having a clear, data-driven plan for each rather than just, reacting emotionally.
Exactly. Proactive, not reactive.
Okay, so looking ahead now, we have these potential entry points. What's the overall forecast for GE Aerospace stock? Are there any major upcoming triggers, particularly that Paris Air Show you mentioned, that could truly set off the next big move for the stock and help it break out of this current compression?
Yeah, the forecast places significant emphasis on the upcoming Paris Air Show. It's highlighted as a critical event that will determine momentum sustainability.
Determine sustainability, okay.
It's not simply a trade show. For GE Aerospace, it's a potential inflection point, a major stage for the company. As we said, major announcements of new engine orders, showcasing cutting-edge tech, strategic alliances, all formed at this prominent global event can dramatically influence market sentiment and the stock price trajectory.
It's a catalyst.
A potential major catalyst. It's where the industry looks for future direction, and GE Aerospace will be front and center.
And technically, are things still looking positive for a potential move?
Technically, yes. The indicators are indeed lining up for potential upside, reinforcing that fundamental strength we discussed. We've heard that MACD is converging, which, as we know, powerfully signifies that immediate selling pressure is diminishing, and momentum could be shifting decisively upwards.
Right.
Additionally, the RSI is neutral, leaving room for upside. RSI, Relative Strength Index, it's a momentum oscillator measuring the speed and change of price movements.
Okay.
A neutral RSI means the stock is neither overbought nor oversold, indicating there's ample room for the price to move higher without immediately hitting resistance from being too high or exhausted from a prior rally.
So it's not stretched thin yet.
Exactly. This combination converging MACD neutral RSI suggests a market that is primed for a significant positive move, but not yet overextended, creates ideal conditions for a breakout.
Which brings us to the trigger. What's the ultimate trigger for this potential move? That specific event or pattern that will unleash the coiled spring.
The report pinpoints it clearly. Breakout from triangle compression will be the key trigger for the next trend leg.
Breakout from the triangle.
Yeah, imagine the stock price moving within a narrowing triangle pattern on a chart. This pattern indicates consolidation, a period where volatility is decreasing, buyers and sellers are reaching an equilibrium.
The squeeze getting tighter.
Exactly. It suggests the stock is currently coiling, building significant energy like that compressed spring before a potentially decisive move. The breakout from this compression, meaning the price moves forcefully and decisively above the upper boundary of that triangle, would signal a powerful release of that pent-up energy.
Pop.
Yeah, and the start of a new, sustained upward trend, or what the report terms the next trend leg. It's really the moment of truth for the stock's direction out of this consolidation.
So if we go back to our analogy of that coiled spring, it's not just sitting there waiting. We know the specific events or technical formations that could be the ultimate trigger for its release. The Paris Air Show, with potential major announcements, or that clear, decisive breakout from this triangle compression pattern, that could be the very event that sets it free, signaling the start of a new, powerful upward phase for GE Aerospace.
That's the setup. It's about recognizing that precise moment of release to potentially capitalize on the unfolding trend.
Okay. Finally, let's go beyond the charts and the company financials for a moment. Let's look at who's actually buying this stock and what's the general market sentiment. The report has a fascinating deep dive section on institutional flow.
The smart money.
Exactly. How does this give us an even more complete, sort of holistic picture of GE Aerospace's current standing and future prospects?
Yeah, this is where we get to peek behind the curtain, see what the big players, the smart money in the market, are actually doing with their vast capital. And the report clearly indicates institutional flow accumulation by BlackRock and Vanguard.
BlackRock and Vanguard, the giants.
The absolute giants. For those unfamiliar, these are two of the largest, most influential asset managers in the world, collectively managing trillions of dollars.
Trillions.
When major institutions like BlackRock and Vanguard are consistently accumulating shares in a company, it often signals strong long-term confidence in that company's prospects.
Why is that?
Well, they conduct exhaustive due diligence, they have vast research capabilities, and they typically hold positions for extended periods. So their buying activity is seen as a powerful endorsement of a stock's potential, acts as a significant underlying support that can underpin future price appreciation. It's a massive vote of confidence.
Okay, so the big institutions are buying. What about other sentiment indicators?
Beyond institutional activity, other sentiment indicators also paint a remarkably positive picture for GE Aerospace. Short interest is below 3%, which indicates minimal short risk.
Short interest, meaning people betting against the stock.
It's exactly. Short interest represents the number of shares sold short by investors betting the stock price will fall. A very low percentage, like under 3%, means that relatively few professional or retail investors are betting against GE Aerospace.
So not many bears around?
Pretty much.
Yeah.
This suggests the market doesn't perceive significant downside risk, or that bearish sentiment is largely absent. And when there are a few short sellers, there's less selling pressure from them needing to cover, making it potentially easier for the stock to move up.
Okay. What about the retail crowd, like social media?
Good question. Then we look at community activity, which provides a pulse on retail investor sentiment. The report shows positive sentiment over 65% on Reddit and X, formerly Twitter.
Over 2/3 positive. That's pretty strong.
It is. This captures the collective mood of individual investors and traders. And over 2/3 positive sentiment is a strong signal of optimism and enthusiasm among that large segment of the market. While, retail sentiment can sometimes be fickle,
True.
it can also contribute significant buying pressure and act as a tailwind.
Interesting. Anything else? AI sentiment.
Yeah, and finally, embracing cutting-edge analysis, the AI sentiment also detects an ongoing accumulation signal in recent algo flow.
Okay, what does that mean?
It means that even advanced algorithmic trading systems, which crunch vast amounts of data at lightning speed, are recognizing and potentially participating in buying activity for GE Aerospace.
So the bots are buying too.
Looks like it. This powerful combination, you've got institutional buying, minimal short interest indicating little bearish conviction, strong positive retail sentiment, and even sophisticated algorithmic accumulation, signals it points overwhelmingly to a positive outlook for GE Aerospace.
Wow, that's a lot pointing the same way.
It's a compelling convergence of confidence from virtually all segments of the market, which further bolsters the technical strength and fundamental robustness we've already meticulously discussed. When the big money, the crowd, and even the machines are all leaning in the same positive direction, it creates a powerful, multifaceted tailwind for the stock's future trajectory.
So it's really not just that the charts are aligning or that the financials look incredibly promising. It's that the smart money, the retail crowd, and even the algorithmic traders are all sort of moving in a positive direction, reinforcing the potential for a significant upside.
It's a remarkable convergence of all the forces that tend to drive a stock. Seems like a very strong setup overall. #TechTagOutro.
Wow. We've just navigated a pretty complex, but I think incredibly insightful RHYTHMIX report on GE Aerospace.
Yeah, there was a lot packed in there.
We started by understanding how those intricate technical signals like Mackey deconvergence and trap recovery can indicate a powerful rebound, even when the stock is under immediate selling pressure right at that critical swing zone.
Technical setup.
Then we dove deep into the impressive financial backbone of the company. Its strong Q1 results, that massive $170 billion backlog, still can't get over that number.
It's staggering.
And those important strategic investments in future technologies like the RISE engine.
Looking ahead, yep.
We also saw how external events like that Boeing incident or the significant tariffs were effectively managed and factored into the overall resilient outlook.
Showing management adaptability.
Exactly. And crucially, we looked at those specific, actionable scenarios for potential entry points, complete with precise price ranges, probabilities, and even time frames for different investment horizons.
Giving people concrete ideas based on the analysis.
Right. The comprehensive picture that emerges then is of a company that, while it's currently navigating a critical technical juncture,
It's got squeeze zone.
it's profoundly supported by incredibly robust financials, forward-looking strategic initiatives, and, as we just discussed, overwhelmingly positive sentiment from virtually every segment of market participants.
Yeah, from the institutions like BlackRock and Vanguard to the individual investor on social media and even the algorithms.
It's quite something. The potential for a significant expansion phase seems substantial, driven by both upcoming industry events like the Paris Air Show and that key technical breakout from its current triangle compression.
The ingredients seem to be there for a potential move.
This deep dive really reveals how that intricate dance between technical analysis, fundamental strength, and prevailing market sentiment can converge, doesn't it? To paint a compelling, high-probability picture of a company's trajectory.
It's rarely just one thing. It's the confluence.
It's not just about one signal or one set of numbers. It's about the confluence of many, each sort of whispering its own piece of the story. So as you listening consider GE Aerospace, or indeed any company you're researching in the market, how much weight do you give to each of these distinct but interconnected layers of analysis? The technicals, the fundamentals, the sentiment.
It's a great question. Everyone's process is different.
And could understanding the deeper rhythm of a stock, that cyclical pattern of compression, recovery, and expansion we talked about, could that fundamentally change how you approach market opportunities and identify those key moments for action?
Food for thought.
Definitely something to chew on as you observe the markets.